Well, it finally happened. The Federal Reserve cut interest rates. In this week's Gate Pass Market Monday, we're going to talk about the big week that the Fed had. On Wednesday, the Federal Reserve cut interest rates half a percentage point, which was the first rate cut that we've experienced since 2020. And before we talk about the rate cut, it probably makes sense to take a step back and talk about how we got here. So if we go back to March of 2022, the Federal Reserve decided to start hiking interest rates all the way through July of 2023, 5.5 percentage points to really combat inflation. And we all know the Federal Reserve is in the business of managing risks. And right now they have determined there's more risk on the labor side of things than on the inflation side of things. And if you take a look, hiring has slowed a bit, but layoffs have been pretty steady. And so Jerome Powell and his team don't really want to give back some of the gains that we made in the economy. And they feel right now is the time to start cutting rates. And they did it in pretty big fashion too, with half a percentage point cut. And so when most people hear rate cuts, they kind of get spooked out. They think we're either going into a recession or we might already actually be in a recession. But that's not always the case. If you take a look in 1995, Alan Greenspan started cutting rates and led to one of the strongest bull markets that we've seen to close out the decade. We've also cut rates in 2019, and that led to a pretty strong bull market as well. So just because the Federal Reserve is cutting interest rates does not mean that the economy is falling off a cliff. So right now, in our eyes, this still appears to be a normalization cut where the Fed's really just trying to recalibrate things back. And like we said, not give a lot of the gains that we've seen in the economy back. But at the end of the day, what does all this mean for your pocketbook, right? We're talking about the Fed and stuff, right? So if you take a look on the borrowing side of things, this should be a positive. I mean, if you take a look, mortgage applications were up 14% over the past couple weeks as rates were anticipating coming down. We think this is probably just the beginning of that. On the flip side, a lot of your short-term deposits, you should expect rates to fall essentially immediately, right? So think of your savings accounts, your high yield savings accounts, CDs, money markets. Those probably will fall in line with interest rates coming down. The bonds right now look pretty attractive and should hold up fairly well, right? Because of the inverse relationship that you have with interest rates and bond prices. And then on the equity side of things, really what investors should focus on is what really they can control is their habits, their time horizon, their patience, because it's very tough to go quarter by quarter with interest rates coming down and trying to predict that, where most investors should be focused on 5-10 years out. And that's really what separates a successful investor from an average investor, and not really getting caught up in the rate cut by rate cut or the quarter by quarter swings, and really focus on the things that you can control. So just to wrap things up, by no means are we out of the woods yet. We're about 1.5 months away from the election. We're still in a seasonally weak period for the stock market. So we expect volatility to be persistent, but this rate cut could be the first step for the Fed to orchestrate some type of soft landing here. So we view this as a positive event. Obviously, the Fed is meeting again in November, slightly after the election. We're going to have some more jobs reports coming out, as well as inflation. So that 25 basis point rate cut that they're forecasting right now could change, but that's kind of where the market is expecting it. So we're expecting another rate cut coming here in November. But as we all know, the market changes very quickly. So as we keep you updated on these weekly things, we will be able to kind of gear you towards that next Fed meeting, which is going to be slightly after the election here in November. But that's all we have for you this week. Thanks for tuning in, and we'll see everybody next week.